Okay, so let's make a full breakdown of the situation that we currently have on gold. Now, starting here from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And what we can see here is that the market has just retraced exactly to the 0.618 of the Fibonacci taken on this monthly impulse, which was also a strong area of previous monthly resistance, which was turned support here and again support here. And we can expect the market to reject to the upside, considering that at the moment we have also broken and retested the 50% of the fib taken on the monthly impulse, which once again the market is testing and has already started respecting as support. So here on the monthly, everything seems quite bullish. Dropping down on the weekly time frame, what do we see now? Here on the weekly, we can see that in all this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here, which is a strong level of demand and support, which once again, we do expect this market to reject to the upside. So also here in the weekly, everything seems quite bullish, and we do expect the market to reject this zone to the upside. Dropping down on the daily time frame, what do we see? Now here on the daily time frame, we can see how this area was acting as very strong previous daily resistance here. At the moment, the market is starting to break this zone to the upside. And if we will have a successful break and close above this resistance, after that, what we can expect is for the market to reject that zone to the upside for the completion of this big and pattern. In fact, if we look at this price action here from a pattern perspective, we can easily identify an M pattern and now this deceleration from which we can expect the market to provide a rejection to the upside for the market to complete the pattern itself at this previous support turned resistance, because as we just said, after the creation of an M pattern you want to see a move to the upside for the market to complete the pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non commercials, so the biggest speculators in the market, are doing, we can see how lately net positions have been increasing. We went from having 168.3k net positions all the way up to having 225.8k net positions, with 310.2k long positions and 84.3k shorts. So gold is getting quite strong from an institutional perspective, and we can expect this market to provide a potential rejection to the upside and completion at the neckline, considering that also from an institutional perspective, we definitely have way more longs than shorts. So how we will be approaching this potential short-term longing opportunity here with students. Now, as usual, we will be reactive and not predictive. Monthly, weekly, and daily combined with the COT data. Those are the best time frames from a directional perspective. And from a directional perspective, we can see how when it comes to the patterns, monthly, weekly, and daily are all bullish. The only bearish thing is the structure that we have here on the daily. However, if the market will manage to successfully break and close from a daily closing perspective above this high, at that point also the structure on the daily would be bullish. So if we will have a successful break above this resistance after the break on the retest of this previous resistance turn support, inside of here, what we will be doing with students is as usual monitoring price action from an intraday perspective, so for hour and lower, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market, at that point, we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at the neckline, which is this previous support, turned resistance here from a daily perspective. And I've enjoyed this free analysis education and update. Make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.